I've published 3 books to date. The first book was Slow Finance, published about 6 years ago. The second was The Future is Slow, published about 2 years ago. And this is the latest book, The Retreat of Globalisation. And it's really just all about how changes are coming through in social attitudes and market trends. Yes, what's been interesting over recent years is just how profound change has been coming through. Social attitudes are changing profoundly. And this is coming through not so much just in electorates, but within the political decision making and leading on to economic change and ultimately market change. I suppose what I really worry about is we've had a slowdown in world growth and we're not well set should there be any further setbacks. Up to now we've used quantitative easing, but the shock and awe has gone from it. We've already cut interest rates, they've remained at multi-year lows and are still there. And most particularly, world growth has got to a stage where in spite of all the economic stimuli, still not growing very fast. So we're just not well set should there be another economic setback. And that's what I worry about in 2017. I don't know if we get a market reversal. I think what we'll do is get a divergent trend. I think many of the successful sectors over the recent years may come under pressure, and then other companies, which perhaps have been overlooked up to now, may actually find that they've got renewed opportunity. So I think it's really a market trend change rather than a market reversal I'm looking for. I think the kind of companies which are very well positioned are those which actually are generating productivity improvement. Investing for improving productivity, getting slightly more greater efficiencies, looking after their customers better, taking advantage of the weakness of others. Those are the companies which I think are particularly well placed. I would also suggest actually that those companies which are delivering for their customers the best, companies which are delivering outstanding service levels, will be able to sustain their margins even when others are under pressure. I think what I've written is a book really which hopefully has quite a wide range of readership. I think those interested in the financial sector will certainly be interested, but actually it's really written for even those which are not professional investors, to give them a view as to what's going on in recent markets and most particularly some of the trends they can look forward going forward. So it's really written for the non-professional investor to give them a better understanding of some of the potential going forward. Well, I think it's going to be struggling most places. Certainly the US appears to have slightly more opportunity in the very short term. I think what's amazing about the UK is that we've got a real collection of small quoted companies here. We've got a much more vibrancy across a great range of big and small companies. And it's that access to that greater vibrancy which hopefully can buck the stagnant economic trend, which is going to be the main driver of economic return going forward. Well, actually, the whole point is that I think it's very important to be open-minded. I think it's not just, it's helpful to move beyond the indices. A lot of investors use the indices as a definition for their investment universe. I think it really helps to be much more open-minded. Look at some of the largest AIM companies, look at some of those coming through in terms of businesses which have just been quoted, look at those companies which are already recovery stocks. Perhaps they've had a poor period of returns but are now well set for recovery. I think some of these areas are some of the best areas where you can make money in the longer term. The whole point about passive investment is that it actually has a bit of everything. That's absolutely fine when things are going well, but if economic risks are rising, if the penalty for failure is becoming more significant, then for those reasons you probably need to move away from passive to active funds, particularly active funds where the underlying portfolio is mixed between not those just generating an opportunity, but most particularly those which are minimising downside risk. I think that's going to become a hugely more important factor in the coming years. Yes, I mean, I think a lot of investors do put a lot of confidence in central banks at the moment, and that does give some reassurance that there is some opportunity. But actually, in truth, they're running out of ammo. They can't cut interest rates much further. They already have used quantitative easing many times, and its effect is beginning to die down. And most particularly, most governments actually can't run bigger budget deficits than running currently either. So really, I think it'd be most unwise to assume that the underlying advantages which we saw in 2008 can be repeated. Yeah, I think the whole point is I don't really set out to write a book. What I'm really interested in is putting my thinking hat on and putting a lot of thought into a period of change. And that's really where the book comes from. I set it out on paper, I look at it, I adjust it, I worry about it until it absolutely reflects the logic as I see it. And once I finish that process, then strangely enough, often I have a book.